you say will be captured for the future. Now, let's get this Founders Investing in Founders, or FIIF program started. As a reminder, this program evolved during 2020 from a desire to increase gender and racial representation in TAO's executive engagement programming for early stage companies. Founders Investing in Founders inaugural investing business leaders, many of whom are here today, committed to an initial pilot program supporting early stage startups for up to 3 years. Founders are here to invest some time, money, resources to support the success of our participating entrepreneurs. That may include mentorship, business counsel, and strategy, as well as access to sources of funding. Participating entrepreneurs will also enjoy a free TAO membership with quarterly events and networking opportunities throughout the year. And it's probably important to note that of the 50 plus companies that we have engaged, 71% are founded by women, folks that identify as BIPOC, veterans, or LGBTQIA. So we're really proud of that. So now, to get us started, a quick reminder about the flow of our event, which is a little different than a panel. So a Fishbowl is a group of experts, and it is guided by a moderator, and the conversation will start where participants can join at any time. So this conversation style allows multiple voices to speak, even when you may not be the subject matter expert, and it encourages participants to overcome potential speaking inhibitions. So it's traditional to have 4 participants on stage at a time, or in this case, on camera in our Zoom room. So I'm going to serve as the moderator after our founders introduce themselves, and then I'm going to exit the stage, and the founders will discuss their perspectives to that first questions. Then as an audience member, if you want to add to the conversation, ask the next question, or just share some thoughts, please raise your hand via the Zoom controls, and Riley or I will get you up on the stage. Then as folks finish talking, we ask you to exit the stage and make room for someone else. If there's not a natural question that flows out of the discussion, I am prepared with a few more conversation starters. Sorry for the overabundance of explanation this morning, but we have never run one of these. So thank you for being our inaugural go of it. So now I'd like to introduce each investing founder and ask each of them to say a few words about themselves. And I am going to start with Matt Ellis.
Hey, Monica, Cara, it's good to be here today. And good to see all of you guys again. I haven't seen any of you for a couple of years now. I'm Matt Ellis. I'm best known in Portland for being the founder of Cloudability, which we sold to Vista Equity about 2.5 years ago. I'm originally from the UK. I live in Portland and I have 3 kids.
Awesome, thank you. Monica.
Hi, I'm Monica Enand, and I'm super excited to be here today. I'm founder and CEO of Zapproved. And we took an investment from Vista Equity Partners as well. Still operating the company, and mostly in Portland, though in this remote environment, we have employees in more locations. And I have 2 kids.
Awesome. Thanks, Monica. Jim.
Hey, everybody. Oh, am I not on camera?
Yeah.
Oh, okay. The Zoom thing is weird. I'm Jim Gochee, best known in Portland for being the Chief Product Officer and the founder of the Portland office for New Relic. The last year, though, I've been the Chief Operating Officer at a very small fintech security startup called Castle.
Thanks, Jim. And I think Ivo is on the phone, but we're going to try to get her on camera. But Ivo, would you like to introduce yourself?
We need to unmute. Is it #6?
I'm also getting text messages about this. Okay.
There we go.
Yeah, do you see her in there, Riley?
I do. I think she's the 404 number.
Okay, let's ask her to unmute. And see
I did, yeah.
Okay. Again, the Zoom challenges are real, so we will give. Oh, there we go.
Can you guys hear me?
Yes.
Oh, hi. This is Ivo. Somehow you guys have to unmute me. I know we have Zoom technical issue. Hopefully, I could be on video. Anyway, my name is Ivo Lukas. I'm a serial entrepreneur, also angel investor. I've been running an agency here in Portland, Oregon called 24 Notion. We're an integrated marketing agency, so I'm excited to be chatting with you guys.
Awesome. Thank you. All right. With that, I'm going to do our first question. Monica, you sort of touched on it, so I may let you lead. But our first question, and I know that we have some folks on this call that are actively pursuing different means of funding, but over the course of founding and running your business or businesses, how did you pursue funding and get access to capital?
Yeah. All right. Thanks, Cara. We started the company in 2008, which was, a big recession year, those of you who might remember. And it was my original intention, though I think because I was naive, that I was hoping to bootstrap the company and not fund it. I had been part of a venture-backed startup just prior to this. And it was great. I loved our venture board. They were wonderful. We had Bessemer, Redpoint, smart people, but saw some things that created some misalignment between management and structural things that created misalignment between management and the board, and really felt like I would love to see if I could bootstrap a software company in the age of the cloud. And so, but that was naive, and I realized I was going to need funding. And so, given the Great Recession and the environment then, kind of pivoted to a really narrow, picked one industry, legal e-discovery technology, and did 2 small angel rounds and kind of got with my own funding, as well as those 2 angel rounds, was able to get us to cash flow break even and started growing organically. The first, back in those days, rounds are about the same as they were in those days. So this is going to sound all odd, but the first round was just $1 million. And then the second round was $1.5 million. And then we were cash flow break even, and we were kind of off and sort of growing organically. In 2014, we sat there and saw ourselves. We were at a big industry conference, and we realized we had a couple hundred big Fortune 500 customers, very, very high retention rates of customers, and our customers were wanting more. When we first started, legal teams are late adopters. So they were very hesitant about the cloud. But what we saw in 2014 is they were all starting to adopt and want more of their workflow in the cloud. So we took a minority investment from a sort of private equity team called K1 Capital. So we did a minority round then, and expanded the product line. And then once that expanded product line got traction in 2017, we did a majority recap with Vista Equity Partners. So tried to bootstrap, did some self-funding, angels, friends and family, local CEOs, and not just local, but across the US, and then minority, and then a majority. Cara.
Hey, Jim and Ivo, one of y'all want to hop in?
Yeah, this is Ivo. Can you guys hear me?
We can.
Yes. All right, I'm still on a dial in. Same way with, that was a great, I think the question is, how do we pivot it, right? And I think if you look around 2020, we pivoted quite a while. I actually took the opposite side of, instead of investment, when I started 24 Notion back in 2009, I actually brought my business plan to all of the VC, and I have met probably over a dozen, I kid you not. It was a really interesting meetings. And I would say out of a dozen, including some of my mentors, they thought I was nuts, right? They're like, Ivo, this isn't going to work. You wanted to do this integrated modern marketing with the big, with the big support of giving back, the CSR. So the interesting part, I got, actually they all say no to me. So that was kind of basically an amazing, kick on my rear end to make sure like, hey, Ivo, what are you going to do about it? So anyway, I actually bootstrapped the agency from a grown up in 2009. And again, the same time with, when Monica talks about, it was like the worst economy downturn actually on 2009. That was kind of how I started the agency. Bootstrap, took out all of my 401k. I remember chatting with my husband. We're like, hey, listen, PB&J for the next, year or so. And I did that. And, now it's over a decade later, never look back. The amazing thing is actually some of the investors becoming a good friend of mine as well. They came back and they said, hey, do you guys want investment? But when we went in 5 years throughout the agency, we were profitable and we're doing great. So as a result, we kind of bootstrap it. But, it's a different type of engagement, and we were able to kind of get an amazing client and, amazing team as well. So that was kind of how I started, just making sure that how you guys pivoted and how do you guys kind of move forward.
So for me, it was a little different. So my dad's from Scotland, and I used to ask him once, why didn't you put ice in Scotch in Scotland? They don't really like it. And he said, because we didn't have any. And so the thing that most people who are living in Portland less than 10 years don't know is that raising venture capital money before 2012 was impossible. It was just really very rare. And so I didn't have to start a business to make money, which is a much harder thing than starting a business and just losing money the whole time. It doesn't make sense, I know, but it's true. So I came to Oregon to follow my wife and got very sick and blew all my seed money on medical bills. This was before Obamacare. So I did some contracting to just get myself a bit more liquid. And I've been using the cloud a bit earlier than many because our data center had caught fire at another place I was at. It wasn't by choice. And so to make some quick money, I helped some people use the cloud and then discovered this problem, which is when you do that, you lose all financial control. So I had an idea to get back financial control when you spend on the cloud, and was in Portland by accident, recovering from this illness. And I had been working in the Bay. I've been through a few venture-backed companies in the Bay. So I brought some contacts, and those contacts made my first round. We raised $230,000. We paid ourselves a peppercorn salary. One co-founder with no kids moved into my house to save on rent. So we basically paid ourselves the minimum we needed to eat. It's amazing how cheaply you can live if you have a mindset of being poor. I had sold my truck and bought like a $1,200 banger that I could repair myself. And it was like burning your boats on the beach. It's like mindset, get it going. So we were pretty capital efficient, and we did a lot with that money. We launched a beta product after about 6 months. And then something very unusual happened, which was we got into the New York Times. We were getting a sign up every 90 seconds. I mean, Jim, the New Relic was kind of a similarly hot story that when people discovered it, it was a great tool. And that gave us this kind of weird uplift. So we effortlessly raised $1 million in Portland in 3 weeks before Christmas on the back of our November launch. And like Monica talked about being naive. I was so naive, I thought I wasn't naive. I'd gone through 4 funding rounds with other companies and thought I knew what I was doing. And we did things like, we'd ask for promissory notes with no valuation cap. And I didn't know you're not meant to do that, but we did it anyway. And people said, okay. And one of the things that's fantastic about the United States is just the ease with which people will invest in your business. Knowing that you'll go to jail if you're lying about stuff. I think the 8th investor from Portland was Drew Smith. He was the first person to ask to see documents before he gave me a check. Other people just gave me a check and said, mail me the documents, So then we went through Techstars, and we had some staff and some customers and some revenue, and we thought we didn't need financing. And the most alluring word that you can say to a venture capitalist is no. So when we left Techstars, we had a lot of interest, and we said no. And everyone went, all right, we'll wait. And one person said, no, here's your term sheet. And it kind of kicked off a bit of a feeding frenzy. Frankly, we were a little overvalued at that time for what we were. But we had the hotness, we had traction, we had the people's mind. And then we raised lots of money. We raised not just equity, but we raised a lot of debt. There's some great debt deals out there that are much cheaper products. If you have faith, you're going to exit your business in the next few years. And that took us to exiting to Vista. I have to say, unlike Ivo and Monica, we never made a penny. We were a true startup. We lost money every year around that company.
Yeah.
And then, yeah, I can offer just a little perspective here, although we were in a very blessed situation at New Relic. So the blessed situation at New Relic was the founder of the company, Lou Cerny, had founded a previous company. And so he had gone through all the heavy lifting of starting one company. And at that point, it was a lot easier to get money. But I do some seed investing, and I'm part of OBF and Cascade Seed Fund. And what I see a lot of companies doing is obviously friends and family just to get things going. And if you can convince one person to invest, then you can convince two, and then you convince three, and then maybe the angel groups will take a look at you. There's nothing like having something to actually show if you can build the thing first. There's nothing like actually having a prospect or a customer validate you when it comes to talking to an investor. So I've been on both sides as an investor. As well as sort of just watching more from the sidelines as the companies I'm a part of raise money.
Anybody in the room want to join? Oh, we have a hand raised. Excellent. Sabra, please, yes, join us up here on stage.
Hey, Cara. Hey, everybody.
Who wants-
My question is riffing right off of what Matt actually talked about. Matt, thank you for everything we've done for Mindcurrent. We're in a good space helping customers. It feels really good to be doing what we're doing right now. And when things are easier, I'd love to see you again, but not too soon. The question I had was, if you don't mind, Matt, it's a very interesting thing you mentioned. It's something we're actually looking at for next year. Can you dive a little bit, to the point that you can share? Can you talk a little bit more about leveraging debt strategically, especially in your situation? I think a lot of people, when they think about debt, they think about, well, there's an interest rate and you've got a certain amount of surplus cash flow. So what's the problem? But you actually mentioned something really interesting there, is that you didn't. Mm-hmm. You were running at a loss and with growth, but consistently at a loss. Can you help unpack for those of us that are new to, early stage debt financing?
Right.
What does that look like? What's 3-year, 5-year?
So we did it wrong and then we did it right, in my view. And I'll tell you how we did it wrong first. So we had 7 employees and we raised $9 million. And one of the requirements that our main investor had was that we moved our banking to Silicon Valley Bank. So we opened the account and Silicon Valley, would you like another 3 million? We're like, what? Like, well, it's this crazy low rate of interest with almost no covenants, no restrictions. We'll just add it on to the money you've got. And I'm like, well, why wouldn't we? And when we drew it, I always looked at it, I called it the grass at the end of the runway. So as you come up to the runway, instead of getting a bridge, you've got the debt, all right? But in real life, it's not like that. In real life, when you spend that money, it's because you haven't been able to raise, or you've got some problems in your business, and it is a bridge. And when you raise your next round, you've got to pay back that money. And when the money runs out, it's a hard stop. There's like a cliff at the end of the grass, right? So I misunderstood. In my head, I signed up for it at a better space. And then as we had some trouble scaling the business, I needed it, but that's when it's the difficult money to have. And I've been on boards of other companies that have been in similar situations. So I was on a board, I joined after this happened. It wasn't on my watch. They went from 18 to 60 to 12 employees in a failed push into enterprise sales, and had debt from someone a little less well-known in Silicon Valley. Silicon Valley have a reputation. So they're going to be super, as flexible as they can to support you. They want you to succeed. Whereas other people who just do debt, they might be a little less flexible. So the CEO managed to get the company running again at a profit, but was facing a crippling final payment coming up. And it completely changed the trajectory of the company. So I would treat the debt really as like an emergency bridge that you've negotiated early on for the early stage. And I'd love to hear other opinions on this from the other panelists and anyone else in the audience. Later on, when we had a business that was throwing a lot of revenue through and was growing and had clearly scaled, then the mezzanine debt, where we're paying like 10, 12% a year on the loan, and we can have tranches and they get a warrant for a couple of points of the business. It's simply a cheaper product than an equity financing. If you think about equity financing and you meet your goals, that's a 400% interest rate, which is much worse than a 12% interest rate. And these guys will only invest in firms that are clearly going to get there. And they're secondary to other debt. You know, they say, don't worry about us, we'll just get our money last. But they're before any kind of earlier investors get paid out. So they know they're going to get their money and they make a really good return. And in fact, I'm an investor in the fund that did debt in us after I left, because they're just a really good investment. So they cherry pick the companies that are the lowest risk and make about a 30% return on their money. Anyone else has worked with debt? I'd love to hear any. I have one data point for the early stage debt.
Yeah, I mean, we have a little experience with it right now, but Saurabh, was that your question? Because you also asked about Matt's comment about we never made money or something, which I think had more to do with if you're in a growth business, the growth tends to be valued more than like any kind of net profit. But Saurabh, I'm not sure if that was also related.
I think he's talking about related to debt.
No, yeah,
surplus cash flow. That's a cheap
Jim,
way of growing your business or something like that, right?
Yeah. My current's my third startup. So the loss on growth is not new. That wasn't the question was really about how to leverage debt intelligently.
Yeah.
And I really appreciate Matt also like how to not do it was really helpful as well.
Yeah, so we also we got debt. So JP Morgan's also getting into it. Silicon Valley Bank is the most common one, and I had to get a primer on it. And the TAO board has a very nice woman who works for Silicon Valley Bank, and so she sat me down, Matt. And the bottom line is it's cheaper money to get, but it has to be paid back. And the thesis behind it is, you can grow the value of the company using cheap money, the debt, to a certain point, so that the bank is making some money because they get some warrants going in. As long as you're a certain size, there's the risk is low in their mind, and then usually they're flexible on payback if you're in a struggling situation, because they do eventually want to get paid back. They don't want you to default because that obviously doesn't benefit them.
The biggest problem with the default is marking loans as delinquent at the Fed, which increases their capital requirements. So they are flexible. However, if there's any sign that you're going to default, then they have to mark it as delinquent, and they hate doing that. So there's a moment when you work with banks where they're all about relationships and long term, that they want to help your business win, but then you run up against things like this loan's delinquent, or this loan might be delinquent if we do this, or even if we change the terms this way, we have to consider it delinquent, even though we know, like if you can forego one payment, but you can only forego it for 29 days, and at 30 days you're now in the zone, and they hate doing that. So you bump up against the regulations of how to run a bank, and suddenly there's no relationship that can get you around that. And so I wish we had gone to raise our B a little earlier, which we would have done if we hadn't had the debt. And that's just learning from experience.
Thank you both.
All right, I'm going to do a Zoom trick, and I'm going to count for 10 uncomfortably silent seconds to see if anybody wants to ask a question before I ask another one. So get ready to feel weird.
I will absolutely ask another question. I mean, we don't need the weirdness. Hey guys, I mean, it's what we do. Let's not stress, okay? This is actually a little earlier than when you would consider debt, and it's something we're looking at for Q1. And I think some of my counterparts here that I know are probably looking at this too. How did you guys? What sort of deals and what sort of talent did you bring on when you started to grow your sales team?
Yeah, I think that's a really good question. And obviously it very much depends on, are you selling to enterprises? Are you selling to consumers? What deal sizes are. For us, we sell to larger enterprises. And so it's a very much an enterprise sale. And the thing I learned early on is that the first salesperson is very different than everybody later, because in the beginning, and frankly, I did a lot of the early sales, and I had never done any. I grew up I have a degree in computer engineering. I grew up on the development side. I'd never done any sort of sales. I never have had a quota or carried a bag or anything. But I think the whole, I don't know if you've read any of the like sales learning curve stuff, but it's really a puzzle in that you're trying to solve in the beginning, because you're trying to figure out, before you have any product market fit, you're really trying to figure out like, how do we sell this thing, and what is the value, and where do we fit in the competitive landscape, and how can we price? And everything is a blank, everything is open. So you really need like a high tolerance for ambiguity, a high tolerance for sort of figuring stuff out, and not too quick to come up with recipes or patterns that actually, like, you can kind of get some signal and think that that's signal. It is signal, but there has to be enough signal before you start to like actually go, all right, I think I have a pattern here. And I think, the uncomfortableness of 10 seconds, there's some uncomfortableness of doing it 12 times or whatever before, and it depends on the price point and depends on the size company. But, if we're doing big deals, you got to do 12, 20 of them before you can really come up with any kind of patterns and sort of try to turn it into a recipe that other people can follow. So I just think that kind of early sales talent, like one, lesson you learn is that, people with these sort of gold star resumes in sales are not necessarily the right people for early stage software or early stage tech companies to hire, because they're used to having a little bit of a recipe. I don't know if that gets at the question you were asking.
Oh, absolutely, Monica. Thank you so much. It's lovely. I'd love to hear anyone else's take as well. And it's, Monica, it really helps also to hear it from someone who doesn't have a background in sales. Yeah. I'm asking because I've got to hand this off. I sell mine current, it's my full-time job, but I need someone else to start doing it. It's really fascinating to hear from someone who wasn't.
I actually partnered with our early salesperson because I honestly didn't know anything about sales. Like, I didn't know how to ask for that. There were silly basic things that I didn't know what to do. Like, and so he really said, no, like, he kind of understood sales principles. And then I had the curiosity and the sort of like, so I think it was like a combination, because I do think having like sales, it's a thing, like actually learning it, it's a thing, and there's real things to learn. So having somebody who can help you with that, I think is really good, depending on your background, I guess.
And I could add too, I'm Ivo, by the way. Hi guys, so good to finally see everyone. I think it's important that your salesperson is passionate and kind of know your business. I think, Monica, you're right. And I think for us on the early on, I had to jump ship and like be the salesperson as well, because oftentimes like the client asks, so what is your services looks like, and oftentimes it's kind of more of you have to get them immersed into your business in order for them to understand what you're selling, whether it's product and services. I also a believer of relationship. I think it's key. So I think a lot of sales individual have a mentality of transactional. It's not a bad thing, right? You got to close the deal, you got to do all this stuff. But I think it's important if you build that relationship, because essentially it goes beyond than just transactional, So that's kind of how we built our team. And we also ask our team to get immersed, like our sales guys usually immerse into our businesses. Like, for example, if they're a new hire, the first 90 days, they are actually not selling anything. They're actually part of our team. They'll like move around in our V team. They move around in terms of talking with our clients. They'll be a fly on the wall, literally. So that seems to be a success for us. Hopefully that helps.
These are some really strong answers, and it's really interesting hearing Monica talk about the right model. I think as a CEO, as a founder, as a leader, you're telling stories. You're telling stories to your staff, you're telling stories to your investors, you're telling stories to the press and the community, and you're telling stories to your customers. And the connection between what your customers need and what you're developing as a product is so important in those early days that I do think it has to be the founding team who are selling. An example for us is when we launched our product, we had here's what you're doing, and then here's how we think you're doing, as in we graded your performance. And people hated this second bit. Being the person in the room talking to these potential customers and watching their reaction, we're just going to stop development on that second half. Just stop, get it, it's gone, right? Rather than have any debate, you can move much quicker. And that kind of selling motion, it kind of continues, but at some point you can delegate it. And when, as Monica said, you found, is this a direct sales model? Is this indirect? Is this through a partner? Is this on the line, or does it have to be face-to-face? For us, it was about 15 months in, we went to the first Amazon reInvent, and we thought we had 3 buyers. And we could tell the buyer walking down the corridor. We were starting to make bets on whether they're going to stop at our stand or not. And it turns out we had 1 buyer, not 3. And if you've set up all the pattern matching to do with that, and you've delegated, you hire people, 2/3 of those people are not going to work, not going to succeed. You lean in on the person who's, we should joke about putting a booth up with a machine, a video, and a credit card swiper underneath. And that these people would just walk onto the booth. Sometimes we'd be demoing it, and then we'd be signing up as we're demoing it. That was a better sale. So at that point, we hired someone who, the first salesperson needs to be someone who wants to get ahead and believes in the product, because believe me, they will not make quota the first year. And so once you get a place where they're making quota, the next thing is scaling your sales team requires training. So as Ivo talked about, bringing people in and being part of the team, that's training. It's how do you get them into a place where they know how to sell. And here's an easy, then there's the sales technique, which you can read in a book, you can do in a training course, you were taught by your good sales leader, your last job. That's a completely separate thing from what do we call it? We had these sheets where if a customer brought up this question, this is what you say. If they say these things, this is their buying motion, all right? Even if they say this, you probably end the call as soon as you can and get off because I'm not going to buy. But that's all the later, the scaling. In the early days, what is the story you're telling? Who's buying it? How do you delegate that once? How do you delegate that twice? And then go from there. And I really echo, was it Monica who said the hot shots, not always good? I mean, there's so many salespeople who want to be VP of sales or want to be CRO because they think that's the way they make more money. One of my commercial executives told his wife told my wife that Matt can keep going on founding companies till he's 70. My husband's got an earning window and he's going to maximize it, you know? And that's really how they look at it. So they think of promotions the right thing, and you hire this hotshot CRO, and they don't know how to run a sales organization. They just know how to sell. And they'll focus on one thing and then they'll get everything else. So that can be a problem for a company too. And getting sales talent into Portland can be tricky too. Anyone at that level, they have teenage children. They don't want to pull them out of high school. They're worried about where they get another job in Portland and they can make more money in the Bay. It's hard.
There's a lot of companies that are actually using different approaches these days to quote selling. And you might have heard of product-led growth, and I don't know if that applies to your company in particular, but there may be someone on the call who's got more of a product-oriented offering. And there's a belief that the product will sell itself. And there's a lot of people who are innovating in this area and really pushing the boundaries. And I think it's worthwhile to ask yourself, like, why do you need a salesperson? And does the customer actually want you to have a salesperson or not? Because salespeople were required in that generation of software businesses. And now we're at the point, where even enterprises purchase software more like consumers purchase software. And as a consumer, I can tell you, I almost never talk to a salesperson when I purchase software. I just go online and I buy it. And even in the enterprise, that's becoming more acceptable. But if you do really need a salesperson, I think Monica's advice was very good, which is stay very close to it. And I like that partnership. And you may be surprised how far you can get. Just with yourself. And so I would defer and delay sales. A lot of what Matt talked about was more like product marketing and really understanding how to talk about and tell the story of your product and how to position it. And so really, well before you think of sales, you have to really think about how do I market and really how do I talk about what it is that I do and tell those compelling stories. Because you can put that on your website. You can, right, like then anybody can sell, quote, sell if they have that talk track. But if you just put someone who doesn't understand your business and whatever, and you tell them to go out there and sell, that's not always going to be effective.
Yeah, I'd like to add one more thing to this. This is Andre Petett. I'm CEO and founder of Fundamental Fitness Labs, and I've actually been in sales most of my life. And there's a lot of good things being said here. I think one of the most important things I heard was relationship. And I think if you have a business that needs a relationship, that's the issue. And part of the problem in sales is most salespeople have not been taught by their previous company to build relationship. They've been taught transaction, right? And so you have this balance between the two. I've spent my whole career in relationship, and it does make a huge difference in that. Sorry, I think I got muted there. But yeah, so I think it's important. And then you know, having people, myself, I'm obviously the salesperson for my team, but having people that really understand your business is critical. I love what Ivo said about how they just come in. That's such a great technique, right? 90 days in your organization before they start selling, because they don't know what they're selling otherwise, right? To Jim's point, if they're just out there selling something, they don't have an understanding of it, that's not going to work. So, but the challenge, I think, for a lot of founders is they don't have experience in sales. And so they don't even know how to Monica's point, they don't even know how to ask for the close, right? And so you do have a great presentation, but then you don't say, hey, can I get a check, right? And so there's definitely got to be that understanding of how that is. And there's not, you know, you can read it in a book, but at the end of the day, you just got to go do it. And I can almost remember today, the first time, you know, 30 years ago when I asked for the check without fearing it, right? Because once you get it done a bunch of times, then it just becomes a habit. So anyway, that's just kind of my little 2 cents on that side.
Andre, you raised two good points. One, for Ivo's side, we would require all of our staff to meet a customer at least every year. So for engineers, that's quite a tall order. So you could be on the ticket desk, you could be at a booth, you could come to a sales meeting, but we require the other way, that also engineers, products, administrative staff, they knew what our customers were. But to talk to Jim, I mean, the product-led marketing is insanely cool. One of the challenges for scaling sales is you've got to measure something. So we're going to measure the number of phone calls. And I'm like, when was the last time you bought anything because someone rang you up? Okay. Product-led marketing, it wasn't called that back then. 20 years ago was sometimes by founders who just didn't like talking to their customers. And they only wanted to talk to them over the internet. And, you know, some little companies like Atlassian and Google built up that way. But it was like an excuse. I don't know how to do it, so I'm going to avoid it. Today, as Jim says, I don't buy. Whenever I go to a website and it says contact us instead of what the pricing is, close it, next one. I hate that motion. So I would double click, sorry, about the product-led marketing. I was being a bit old-fashioned just describing what we did at Cloudy.
I think you're right, Matt. It's interesting because I think traditionally salesperson are being taught to have volume, right? Like if you have, 5,000 calls a day, and that's your KPI and goals. But I think the world is changing, and how we're, connecting with brand, product, and service is so different now, and there's that buying, impulse buying. There's also whether it's enterprise, like Monica, you mentioned enterprise, startup. So what it is that you're selling. So I think it's also important for you to know your customer, like who are you targeting? So necessarily it doesn't mean that you have to cast the net, wider. Just know your customer. If you're going after, 3 different vertical, retail, I'm just picking this up, retail and, e-commerce and X, then you kind of want to narrow it down to make sure that you know who you are going after. I think that seems to be the lack as well, that we've noticed some of the salesperson earlier in the year, the first 3 years was they're just going after everybody. And we're like, wait, stop. Why are you calling, 200 people in a day? They're going to hang up on you. So I think those are the big thing for us. I think understanding your customer so you could just go niche is key.
Eva, I want to circle back on this just to close it out, because I think this is a fantastic conversation. Also iterating on what Andre said. And I think, Monica, this comes full circle for someone I started selling when I was 16. Luckily, I was good at it, or I would have lost a lot of weight, as I had no other backup. And I was selling commission only. So you get really good when you have to eat. I think Ivo, you really brought this point home of, Monica, you'd said, as someone who's not in sales, you have to learn how to close. You have to learn to ask for the deal. And I think it's really important that when you do start to build your flywheel, which is what we're talking about here, right, is the product that sells itself, right? And customers that refer other customers. So, and why would a customer refer another customer? Well, because they like it that much, right? So you lean into that. I think really on the sales side where we're at is finding people. It's not so much about the process of selling, it's knowing who the buyer is. And at least in my experience, 25 years selling, that differentiates good and great salespeople. A great salesperson, like Matt said, will close the call in 10 minutes, save everyone's time and save the relationship, because he knows the person on the other side is never going to buy. But he also knows with the right ask, that person will refer 3 people who will absolutely buy on the spot, right? So I think that's where we are right now. So that's why I was asking. I really appreciate not just from the mentors, but also Andre from the founders, the wisdom here about that initial sales and not hiring salespeople and expecting sales to come.
One other thing that I've noticed lately is where are your leads coming from? And so this is also something you have to think about. You can lean into marketing and you can lean into awareness and basically get inbound through that, or you can take more of an outbound approach. And at Castle, most recently, we were doing heavy outbound, and it was LinkedIn and it was email. But what we discovered is people are just inundated with messaging, right? And so it's very hard to get their attention. And so instead, we kind of flipped the lead model to be more like, paid, Google search oriented, right? So we're trying really hard to get ranked in Google. So when they're searching for the thing that we do, they find us. And then it's inbound, and an inbound lead where someone has pre-qualified themselves, right, is going to be a little different to handle with a sales team. So if you think about selling, you also need to think about, well, where is the lead coming from? Are my sales team, are they generating those leads and then trying to close them, or do the leads come from a different place? And you just want to think about that sort of flow or that motion of sort of leads to then, like, how does that get turned into business?
Yeah, I'm sure this is obvious to everyone, but I think it's really important to know who your buyer and how they buy is, because, I think a lot of what Jim and Matt are rightfully sharing is kind of IT buyers or development buyers or security buyers. Legal, for instance, is just a weird, different buyer. Like, they aren't going to do what Matt says. Like, that lawyers are not going to buy that way. They're going to buy through. They do like getting called, and they do like getting outreach, and they like sort of you making them feel important, and that it's very reference oriented. So I mean, that's just one example, but I think depending on who your target market is, there are buying behaviors that are very, very different depending on sort of the profile of the person.
Yeah, and Monica, one other thing, I feel like I'm dominating, but if you can find another channel to sell through, like a partnership channel, that can be a great way to get lift off in the early years. So like in the legal world, Monica, were there like trusted partners who lawyers talk to, and could you have basically sold through those partnerships? And that way you don't have to learn how to sell to a lawyer. You partner with someone who's already doing that.
Well, Jim, that's a really, really interesting point. So we created our space. We were literally the first product to release, and we thought the best product would win. How naivety, right? And we had many imitators, most of whom died a fiery death. We had one imitator who had a crappy product. When I say crappy, it was plus or minus 20% accurate. And one of our big customers, General Electric, they threatened to fire us when we were 0.8% inaccurate. And we got like a $80 million bill to 38 cents rounding errors. And they're like, oh, all right, we'll take that. So we misunderstood the market. And the people who needed that accuracy were like the top 10%, half of whom would build their own product, like Netflix did, okay? And everyone else, they were just completely overwhelmed by this completely out of control thing. And they turned to the only thing they knew how to maintain financial control, which was to buy cloud services through a reseller. And at the beginning of our business, we said, how big is the market for people who are spending significant amounts on cloud, but are stupid enough to buy it from a reseller? And we dismissed that. We're like, we'd never worked with any of those companies. We didn't understand that. What our competitor understood was the resellers needed to avoid chargebacks. So at the end of the month, when the The poor fool customer got the bill. They said, what the hell? The reseller could go, well, you didn't use your dashboard to look at the bill, which is roughly accurate, you know? And they oversold us 3-1. And by the time we realized what was going on, it was too late. The business model of how you sell and through partnership and through channel was so different. And it was like shooting fish in a barrel. Now today, you have to be accurate. And today, the new owners of our business are killing these guys with accuracy. But that wasn't the way to make money 5 years ago. And understanding that in hindsight, I wish I'd had someone like Jim going, look at your partner, or Monica saying, you know, well, who are your partners here? How do you scale your sales effortlessly? Because every time your partner's selling one of your products, they're benefiting. So that was a lesson learned. We had a good exit. We could have had a better exit if we'd understood that.
Yeah, and just, sorry, on that point, we made some early mistakes, and I thought I'd just share because it was super painful, and I would love for you to not make the same super painful mistakes. But as Jim said, credibility, like associating yourself with a trusted name in the industry, that was very important for legal buyers, because if they trusted somebody and you were at the party, at the dance with that person, then you were, you know, some of that trust rubbed off on you. So that was great. But what Matt said is, like, his partner and the reseller was aligned and motivated exactly. What we found in our, because we were disrupting sort of law firms and legal service providers, what we found is that the channel was not a way to create demand. The channel fulfilled demand, but couldn't create demand. And that we had to create demand to create pull through, and that the channel would help us fulfill and be a trusted partner, but that we couldn't create demand for the disruptive product through any kind of partner. No matter how much enablement you did, no matter how much time you spent with theirs, no matter how incentive schemes that you kind of sat around and talked about their commission structure, it didn't matter. Like, you had to generate your own demand.
These are key strategic things that if you get wrong, doesn't matter how well you execute and how much money you're going to be with the handbrake on. It doesn't mean you won't succeed, but you'll just fly to the moon if you get these things right.
Yeah, I actually just want to circle back, Monica. This is so spot on. I mean, it's beautiful, actually, because you know, the last two startups I was with, one is a unicorn now, the other just went public, right? So I've seen each stage that they raised through, and there's a very special stage between Series A and C, where you get offered a lot of partnerships, and 80% of them are worth nothing.
Mm-hmm.
You do 6 months, I've seen this, 6 months of work they did with large partners, and the revenue was not even 5 figures. It paid like 10% of the people who worked on it. But everyone thought with the partnership, the revenue would come in. You kind of forget that the salespeople over on that side need the same motivation that your salespeople need. How is this closing my quota easier? How am I making more money? So I think that is so spot on, Monica, is knowing what the bulk of your customer acquisition cost is, right? Is your partner really going to bring in sales, and then what's it going to cost? And if they're not, then how are you going to drive that demand that they can catch?
Can I give you a real world example of that? We spent years trying to butter up Amazon. And companies like Amazon, they've got hundreds of little companies going, oh, please, can you make my company succeed? We hired a person from Amazon. We're doing it all wrong. The first meeting that we go into, they changed the game. So the salespeople, we did this so well, we actually got banned from the sales offices. So we would go find the salespeople in the last week of their quarter, and they would open up their Rolodex, and they were cool customers, and they'd use our product just for the demo to show them if they bought these commitments to Amazon, it would cut their bill for the next quarter. And on average, they would buy $300,000 of these products. And when the salespeople knew that it was like $300,000 per successful call, 10 calls a day, suddenly we had all of our sales, we moved our year 1 month out. So all of our salespeople could spend the last couple of weeks working with Amazon salespeople to close these calls. And they ended up banning us physically from the office, and we would have to do it over the phone together. But like, we're helping them sell, they're putting our product in front of people. It was insane how popular it became.
We have just over 5 minutes, and I don't know if anybody from the audience wants to throw out a closing thought question. Otherwise, I may just ask each of our founders to leave us with words of wisdom as we close out a year and start planning for a new one. Oh, wait, I see a hand. Leah Daniels.
Hi, thank you so much for today, both TAO and everyone on the virtual panel. My question is, I'm super early days and I've done this before and spinning out companies out of Galwa, but I'm curious your perspectives on how you found your earliest adopters or design partners that helped inform your very first MLP or MVP, whatever you want to call it. I think there are a lot of people who are super early days, and that could be a useful thing to hear from some of you very successful folks.
Okay, I guess I'll jump in. I think those people have to be people who already know you and like you for some reason. Like, I just don't think that if they don't have some reason to think you're smart and just like you, honestly, it's just like you. They're not, it's such an investment of time and energy to be an early partner like that. They have to really enjoy spending time with you, enjoy brainstorming with you, enjoy problem solving with you. So they kind of almost have to be somebody in your network.
Former colleagues who were all working as practitioners, and a few years later, they were buying the products of companies. And the first 3 customers of mine, I'd hang out in bars with them, I'd go on holidays with them, and I knew them well.
Yep, your biggest supporter. I agree.
Great, thank you.
All right, I feel like with 2.5 minutes and seeing how this unfolded, that we should probably stop here because I think the conversation will continue going. I just want to say thanks so much to Matt, to Monica, to Ivo, to Jim. Thanks to all of you who are entrepreneurs for spending some time with us. We know you are busy as you are growing your businesses. I hope you found it useful. And just know that in 2022, we will be back with events that I hope are in person, because I think this could be a really interesting concept to do live. But if you have any startup founders in your network that you think are a good fit for this group, please encourage them to reach out to us and join. And thanks everybody for attending today. I'll give you 2 minutes back in your day and maybe a little early lunch. So thanks so much and have a wonderful rest of your afternoon.
Thank you guys. Bye.